All right, all right. It's Tuesday morning. Feels like a long week already. What do we got going on? Well, you know what? First things first. Let's look at what's in the snooze or in the reports. We got Red Book, non-farm productivity, really nothing important. What everybody's waiting on is the CPI and the core inflation rate. So the CPI basically, oh, I've got bugs. It tracks a few hundred goods and services. It reflects what the basic household spends every month. And the baseline for that is 1984, what you spent in 1984. And this is a percentage above 1984. And it's not 296%. I think that translates to about 60% above the baseline of goods and services purchased in a household in 1984. So, I mean, that's how much you want to look at. Well, that's what the Fed's looking at. And that's a good indication of what the inflation rate is. Bonds are going to react to it. And it's a pretty important number, kind of governs which way the Fed's going to go. Now, between you and me, we know the Fed's going to raise, right? Because they want to get to a certain baseline because the economy can handle it. We were way undervalued as far as interest rates go, and it was time to fix that mistake. So that's what they're really doing. I think they're aware that raising the interest rate is not going to fix the the inflation issue, because again, it's not really a demand issue, it's a supply issue. So cutting back on demand, the little demand that there is, does pose that threat of throwing us into a recession. But people are still willing to spend, so right now we're good with that. Everybody's flipping out about the jobs report, the non-farm payroll report, because it was so high, fearing that the Fed's going to keep bumping up, bumping up, bumping up. But I think the Fed is just going to bump up to its target rate, get us to where they want us to be, and it's a wrap, and kind of rely more on supply chain easing than interest rates. I think they're aware of that, but they're not telling that story because the market is very reactionary, and there's always contrarians out there. It'll just muddle the waters. But this is my theory. So we're going to watch the core inflation rate. So we could expect choppy markets today. Tomorrow, not only do we announce, but China, Japan, and Germany announce. So you're talking about the three biggest economies in the world, or fourth with us. It's quite significant, and they would like to see that number come down a little bit, ease up a little bit. So yeah, watch your downside today. Things are going to be choppy. If you don't see an A+ setup, sit on your hands. So that being said, let's get to what the markets look like. Hey, by the way, subscribe, hit the bell, hit the like. I appreciate all that. Comments and everything are welcome. And where are my commodities? There they are. All right. First thing we look at is let's look at some Earl. And basically, we have this micro trend right here. And I mean, I'm neutral pending a break of this micro trend. And then I'll look to be bearish. It's a pretty strong bar. Doesn't look like we're breaking that micro trend today. We'll have to see what she does right around here. This looks like a significant resistance right in this area. So we'll watch this. But I'm just watching this micro trend, seeing if this trend continues. It actually just broke that downtrend with this high. So we'll have to see if it makes a higher low. And we may change our views on that bad boy. And we'll take a quick look at bonds. It retraced 50% of that move down yesterday, and now it seems like it's rolling over a little bit. There was a shooting star on the weekly. I'm going to be bearish pending that shooting star. There it is right here. We have to break this low. The low of the 140.19. We break that low, we're going to see interest rates start to rise, and we'll see how that affects the S&P. But Right now, we're just neutral on bonds pending the break of that weekly shooting star. Let me just put that back to 240 so I don't make the wrong moves. There we go, 240s. All right. That brings us to gold. Really nothing happening in gold. It's staying in this channel, just moving right along. And then finally, it brings us to the markets. Voila, did it. All right, take a quick look at the S&P. This is a daily chart. You can see we were doji. We're just chopping around. We're not making any movement until we get the CPI number out. So there's really nothing going on. No, nothing to excite me. No trades to really look at. Let's see what that 240 is telling us. Yeah, I'm neutral pending a break of that line. And even that's going to be a hard trade. You got a resistance here, and then ultimately a break out of that channel right there. So I'm not going to do anything until I see what the CPI is or how the markets react to it. The NASDAQ looks like the same thing, just in this channel right here. The Russell's still continuing that uptrend, which bodes well for the markets. I kind of feel that this is a good indication of what the overall investor feels. And I think people are kind of encouraged. But again, I'm waiting on that CPI to see what's going on. I don't have, oh, there's the Dow. And the Dow is doing the same as NASDAQ and S&P 500, just kind of hanging out in a channel. So that's it, man. That's it. We're just waiting on that CPI. We got to see what that CPI does, and then we'll know how to trade. So, hey, everybody, watch your downside. Calm and cool. Be at peace when you trade. And today, good luck with your tradings.